This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 21st, 2015. Euro dollar. So despite recent setbacks, inability for the market to break below 107.96 is a critical short-term development as it takes the pressure off the downside and keeps the door open for some more consolidation. A break below 107.96 would open the door for a fresh downside extension back towards that recent December low at 105.20, which guards against the 104.60 multi-year low from March. At this point, only back above 110.60 though would compromise the immediate downtrend in euro dollar. Sterling dollar. So cable has put in another multi-day low, confirming a fresh lower top at 152.40 and now exposing a retest of the 2015 low at 145.66 further down. At this point, only back above 152.40 would compromise the current downtrend. Dollar yen. So dollar yen has been very well capped into rallies, with the market continuing to be capped below 123.76 range resistance, and this puts the pressure on the downside for a retest and potential break below that recent low that comes in around 120.35. Below 120.35 then exposes a drop back into the 119 area, which guards against that spike low from August at 116.12. Euro Swiss. So not much going on with Euro Swiss as this market continues to be confined to some tight multi-month range consolidation. A break back above 110.50, however, is favored eventually given the recovery outlook from those record lows seen earlier this year. Back above 110.50 will expose 115 further up, while only a close below 107.14 would compromise the recovery outlook for Euro Swiss. As such, look for this latest round of setbacks to be supported. Aussie dollar. So Aussie remains confined to a downtrend, with the latest rally once again being well capped ahead of 74 and favoring a fresh downside back towards that multi-year low from August, just shy of 69. Dollar CAD. So dollar CAD has raced up to a fresh 11-year high just over 140 and just shy of the 2004 peak at 140.07. Daily studies are now severely overextended and overbought, while weekly and monthly studies are also overextended. This does suggest that the market could be poised for some form of a short-term pullback to allow for these studies to unwind before heading higher. But from here, any setback should be very well supported into previous resistance by that 134.57 previous September peak, while ultimately only back below 130 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So although Kiwi has been bid up relatively in recent trade, the market continues to be very well capped below the 69 handle, where a medium-term lower top is sought out in the confines of this broader downtrend. Deeper setbacks are favored back towards initial support, which comes in around 64.30, below which exposes a retest of that multi-year base from August in the 62 area. SPX 500. So the S&P 500 has broken down and closed below what had been some previous solid support at 2003, and that close on Friday below the level now opens the door for an acceleration of declines back down towards the 1870 medium-term support in the form of that low that we'd seen back in late September. At this point, only back above 2117 would compromise the bearish outlook for the S&P 500. Gold. So gold is doing its best to recover out from recent multi-year lows at 1046, but a break back above 1100 will be required to officially alleviate immediate downside pressures and take the pressure off the downside. Inability to take out 1100 will suggest that this is a bearish consolidation ahead of the next downside extension below 1046 and towards major psychological barriers at 1000 further down.